Hello, today is Saturday, the 5th of May, 2012. This article is entitled CME Raises Margins for Non-Hedged Accounts to Meet CFTC Rule. This is the third paragraph within the article. President Barack Obama last month urged Congress to bolster federal supervision of oil markets, including bigger penalties for market manipulation and greater power for regulators to increase the amount of money traders must put up to back their bets. Regulators are seeking to limit speculation in commodities and ban so-called proprietary trading at banks. Okay, I'm going to go over just a little bit of this. First thing, back their bets. Quite frankly, they're saying without saying, although they're saying it's gambling, and it totally is a paper market, digital market, making bets or wagers for a particular price action of a chart to either go higher or lower or do whatever stipulations that their bet requires. Also, you hear the stuff that the president wants to bolster supervision of the markets, especially oil, for penalties for manipulation of the markets. They got a long, long ways to go. And whether they actually want to do that or not, that's up for debate. Let's get into the trading markets or the technical analysis of these markets. I've talked a lot about this, so I don't really want to go over too much more in detail, other than this is test number 2 of this significant 30 level, the 61.8% exponential Fibonacci from this low and this high, and this level needs to hold or not stay below and hold below the 30 level. If that stays below it, basically breaks below in here, then the rally would be that of a failed move, and therefore the bear market would continue. You move this into the weekly chart. And by breaking down below this, the next potential support level is really at 26, although you can make a case up into this level here around 28 as a more shorter term support level. And if these lower levels don't come into play, building this higher low from this previous one in here would give us a third test of this Fibonacci level, as it's calculating from the breakout lows of 17 3/4 from late August of 2010, and the close to $50 highs from end of April of last year. Therefore, for this rally to not fail, it needs to hold and stay above 26 and change. It has done that thus far. Let's now finish this off within the quarterly chart. And within this, again, if we move down to the 20 level, that's the next support level, because although there's no Fibonacci lines within this, this is a 38.2% retracement from the lows in here up to here. And whether you choose the breakout lows or the bottom, it's pretty much the same. But with that being said, this is the 38.2% retracement, and right here is a 23.6. So when you have a big move, you expect to come down here, find support, which has happened. But again, if we break below 26, the next expected support level is in at the 18 level. I've stated before, a large disconnect should come within that measure. And I want to go over one idea I've been thinking about it while it's on my mind. And that is, what do you do if silver goes up so high? Do you sell? Because some people say, well, if silver goes to 200-300, I'm not going to be selling it for dollars, because that's the reason why I'm getting into silver for the first place. At least myself, I'm not getting into silver because I love the metal or I think it's the most shiniest or useful metal. However, I'm getting into it because of the manipulation showing me that the prices have been massively suppressed and that it will hold and retain its value. But if you get to a situation where the price action gets up to 200, or whatever price it happens to be on the higher level, I'd have to ask myself, okay, if I sell now, what can I change these fiat dollars in for? Because if I can still sell it for fiat dollars and I can turn those into other real assets, goods I need, whatever it is that I want to buy, then yeah, I would be selling some within those levels. But the long-term plan is that it's going to be money. I don't mean money that it's going to be money as in the currency is going to be backed by silver. It might be backed by gold. It might be backed by a basket of such, and it might have a monetary reform. Regardless of what the situations happen to be of the list that I suggested or expected, it will retain its value. So that is what I'm looking for within the long-term time frame. Thank you for tuning in and have yourself a great weekend. Bye-bye.